All right. Good morning, everybody. All right. So Asia continued that rollover from yesterday. Sorry, there was something wrong with my headset. I think that's better. Seems like it. All right. So Asia's continued that rollover. And Europe is still sitting inside day. It's a really muted candle here that we're looking at on the European session. So yeah, it's still inside day, but I mean, really, they haven't done anything this morning. So we do got a lot of stuff on the table today. The main thing very likely is going to be the job numbers, not Powell in the House. Yesterday was the Senate. Today it's going to be the House. He's already dropped the bomb. So it's kind of hard to see that that we're going to get a repeat of yesterday's reaction to him talking when he's already said, right, the worst that very likely that he's going to. I'm going to try to adjust this a little bit, see if that, tell me if that's too quiet. Something's up with my headset this morning. It's always something, huh? Oh well, it seems a little bit better. Not great, but a little bit better. So now we have the 2-year above 5%. That's going to lift the curve across. Did I turn it down too much, guys? Because now I'm getting questions about audio. Well, there's a solution to that. All right, let's try that. You guys hear me now? Orale, güey. Buenos dias. All right. All right. So it's very likely we're not going to get any kind of response compared to yesterday. The default for yesterday was don't rock the boat. Obviously, he did not go with that route. He went with the Mike Drop Jackson Hole style, where he tells the market to suck it up and put on their big boy pants, right? So the market didn't like that. Down we went. It's hard to see a repeat of that, especially when he caught a lot of people off sides yesterday. They didn't expect him to come out and be so blunt and forthright, right? So that's a good part of what happened yesterday. Also, yesterday was in the Senate, today's in the House. The House generally has more of those gotcha questions where they're, setting him up just to knock him down. Silly questions that he most of the time has no control over the things that they're talking about. They just get a chance to make them look good or make them look bad, and make themselves look good and make themselves, look like fools with the questions that they ask. So very likely nothing going to come out of the House today, House hearing, but a pause on the market would be the baseline bet that we sit around waiting to make sure that he doesn't, stick his foot in his mouth or something. The likelihood of a 50 basis point rate hike for March is now at 73.5%. We're at 4.5, and with a 50 basis point rate hike, we would be at 5. A month ago, there was a 90% chance we were going to get a 25 basis point rate hike, and there was only a 9% chance that we were going to get a 50. Now we're at 70, round up, we're at 75% chance that we're getting a 50 basis point rate hike. Now I want to be clear, he intonated, right? He intonated that he was open or willing to raise 50 basis points. He didn't actually say he was going to raise 50 basis points, and he can't, right? Because they have to talk about it in the committee. Wink, wink, nod. I'm sure they already know. Just keep in mind something. What if they don't raise 50 basis points? What if they only raise 25? This market will explode to the upside. So we now have more risk to the upside, right? Something to consider. And, I always try to play both sides when I'm looking at what I'm holding, when I'm looking at what I want to hold, and where my risk comes from. I like, carry some longs, carry some shorts. If we don't get those 50 basis points, this market is going to take off like a rocket. So now they're pricing in for May a 25 basis point rate hike, which they already were, because they believed that we would be at 475 by March, and that we would be coming into 5 in May. Now we're going to be at 5 in March, which means we're going to be at 5.25 in May if they run a 25 after March. But they have to price in at least a little bit the possibility of a 50 basis point rate hike in May also. So it went from not existing at all a month ago to the idea of having an 18% chance of another 50 basis points in May. And it seems like they're 5.5 to 5.75 is where everybody is pricing in that we pause. So far, that's the target terminal rate. And I posted it yesterday because Powell had mentioned, higher for longer. And a couple analysts crunched the numbers and came out with what that puts us on the target rate. There's still some analysts who say 6%. They're a minority group at the moment, but that might not last, right? It's growing, the amount of people who believe that we could, set the terminal rate at 6%. The ADP numbers today are a big deal, probably way more important than Powell going to the House today. And the JOLTs, they just don't get enough attention, but they're certainly worth keeping your eye on. So we can see the volume this morning. We're at around 125. Anything between 1 and 2 is fine. Less than 1, we would anticipate that there's some econ, and above 2, well, we would anticipate that an event just happened. So we're within the guidelines. We just turned that off. We don't need it anymore. We do have an EIA report, and energy is a really big deal right now. So it has more weight now than it used to have, say, like a year ago, 2 years ago, 5 years ago. We also have the 10-year auction, and the 10-year auction is kind of a big deal. So watch out at 1 o'clock today. Watch the clock. I can't stress that enough. And when it comes to 0-day trades, this afternoon is going to be a little bit dangerous because of how many different economic events we have, including Beige Book all the way up at 2 o'clock. And then you got Power Hour at 3 o'clock, and then, it's a wrap on the day. So normally try to break the day into 3 zones: the morning session, the lunch, and then the afternoon. And I like to do a 0-day in the morning one, and then, another one in the afternoon. I don't like to start a morning one and carry it into the afternoon. I won't be putting on an afternoon 0-day today. There's too many events this afternoon that can get in the way. So watch the clock, watch the clock. I just keep hammering away at that. Yesterday's reversal off of the lows happened at 3 o'clock. I know it seems very simple. I've had people reach out and say some really complex things to me of how they've tried to complicate it and match it to all kinds of things. Watch the clock literally means look at your watch, look at the clock on the wall. What time is it? The government has a ton of economic data that it has to put out all day, every day. And it happens on the hour, on the half hour. And even if you don't know what the economic event is, if you notice that it's just about a new hour, 5 minutes to 1, 5 minutes to noon, 5 minutes to 11 a.m., the market can make a significant change in market structure on the hour and on the half hour. So especially when we know 10:30, Europe closes. 3 o'clock, power hour. 8 a.m., bonds open. 4 a.m., pre-market opens. We know these things. These are things that we can prepare for. We have an MDP this morning. It's a missed daily pivot. We haven't touched it. Markets generally hit their pivots at least 80% of the time. So when we haven't hit it, it means we're in the 20 percentile. There is a strategy that goes with it. It's not mine. You can look it up. It's called an MDP, a missed daily pivot. At the very least, if you don't want to trade the strategy, and I don't trade the strategy, you can use how the strategy is formulated to your approach in market analysis. We have a very narrow IB. The IB is the initial balance. It is an open range that is 1 hour, starts at 6 at night, ends at 7. A very narrow IB implies that there is still a lot of work to do. That work has not been done yet. We did start to expand out of it a little bit. This is the start of the megaphone pattern. If we think about the idea that price aggregates, if we're holding in a range, it will shoot through the range, wick through, go a little more until finally it breaks something. And it makes sense if you think about where liquidity is at. Also, think about that toy that you can spin, right? For those of us old enough to remember manual toys, that you spin it like a top and it would just, like a fidget spinner, only you needed a flat surface to spin it on. Well, what happens when you would spin that spinner and it start to slow down and the little circle that it was spinning in started to get bigger? The gyrations got wider until finally it toppled over and it was done spinning. That's the megaphone in a nutshell. So looking back, we do have this head and shoulders. I wouldn't have traded it as a head and shoulders. It's really, really wide, but it is there. Same as this really wide one back here. The more, there's an inverse here. The more spread out or broken or unnatural the pattern looks, the least likely it is to actually fulfill. The reason that this head and shoulders does not match this move is because the move far exceeded the measurement for what a head and shoulders would give, right? We measure patterns. It's supposed to give us a certain distance. This went way far and beyond past that. $39.89 is last week's midpoint. We're kind of flirting with that level right now. So we overshot it. We're gravitating around it, building a base, starting to megaphone. It won't stay here for much longer, right? Price is running out of time to be able to maintain this balanced area. It's getting out of balance. So we're going to break through. The idea is, where are we going next? Well, we don't have a market maker move today, not yet. But we do have our ADR levels. The ADR low takes us really close to the previous week's low. 39.28 is the full ADR, and the previous week's low is at 39.24, 39.25. There's no reason to split hairs on that. It's a quarter number. It's very likely where we're going to go. Just remember, 39.30 is a cog line. $39.31. $39.73 is a voodoo line, and there's another one at the ADR half at $39.59. So we're doing a lot of talk about the downside, but you know there are upside risks as well. With the daily pivot overhead and the weekly pivot overhead, we've now need to change our bias to short rather than long. But today needs to close below that weekly pivot. So just because we're below the weekly pivot right now doesn't mean anything. We have to close below it. We closed below it yesterday, so that's a good start. Today would be the follow through of the close from yesterday. How we end today, whether we're above or below that weekly pivot, will confirm the breakdown of yesterday's drop below the weekly pivot. The previous week's high is really close to yesterday's RTH open. When we go look at the volume profile, you're going to see that there's really not a whole lot between us and that previous week's high when it comes to like structural resistance. So if we do get a break above, say, 404, we should have a pretty clean shot back towards that 40-50 area, other than the 40-31 cog line. And a lot of voodoo lines in between, 40-22, 40-11 cog. There are some things in the way, right? All right, 10-day, 30-minute volume profile. We are at the point of control. If we break down below our own Globex low, or the RTH of yesterday, either one, take your pick. It's a fairly straight shot to the downside. Remember, when we're at the highs, we expect to go to the lows of the box, and when we're at the low of the box, we expect to go to the high of the box. We've been transitioning from that high down to the low, but we're not at that low yet. And that low isn't going away anytime soon. We would need an entire another week until next Thursday, not tomorrow's Thursday, before we would lose all of the data from this low. So the box isn't going to come up to meet us, and we're not going down to the bottom of it likely in a single day, unless we get some really bad data out today. Powell said something yesterday about jobs that actually took some of the weight off of how important the job numbers are today. They're still important, don't get me wrong, and I won't diminish their importance. But something that Powell had said yesterday kind of diminished their importance. I'm kind of scrolling back looking for it. So Powell said we are not attempting to increase the unemployment rate, which means everybody who's watching the unemployment rate as a gauge or a measure to see how well the Fed is accomplishing their mandate. Well, if he takes the weight off of that and says that's not our goal, getting the unemployment numbers up is not our focus, then seeing higher unemployment numbers isn't going to intonate or prove that the Fed is accomplishing their task, right? However, they have said more than once that they're trying to cool everything off and that wages are sticky and they are directly connected to employment. So as long as employers have to continue to, provide a higher wage to bring in workers, pay more for those workers, then they're going to pass those costs into their product. That's going to keep inflation up, and inflation destruction is the goal. So either way, it should take a little bit off of the dot plot on jobs. All right, so the volume profile from yesterday, we have a level at 4017. So if we do get a topside breakout today, getting through 4017 is going to be eventful. We had one back here and then another level yesterday right there. So that level, and you can see even in the drop down yesterday when Powell first did his mic drop moment, that's where price got hung up. Now, sure, I mean, it punched through the level, make no mistake about it, but that is where the price responded. Even in all of that sell side activity and all of the trading that was going on, price did respond at that level. So if we were to get a topside breakout today above 4,000, 4020 is absolutely an area where we're going to anticipate a reaction in price. And it very likely will struggle to get through that level. It very likely won't be an easy shot. Not unless it's directly connected to an economic event or something that somebody says. We still have a VPOC at 39.46 also. Looking at the move from yesterday, we want to ask the question, have we moved too far too fast? Are we oversold? Are we looking for a bounce? Nope, not yet. We're very close to the center of the court, at least on the weekly. And what we're measuring here is how far away from the 10-week moving average are we? We're not even 1% away from the 10-week. So that's a negligible amount. We're barely underneath it. Here we're looking at the 10-day, and it's the same thing. We're barely underneath the 10-day, not even 1%. We can expand 2.5 or even 3% below the 10 before we would even consider the idea that we might have been moving too far too fast, or that we are in some way oversold and looking for a little bit of a relief bounce. So I wouldn't be looking for a move up yet, based solely on how far we've fallen, because we haven't fallen enough for that. We do have the weekly expected move right underneath us at 39.77. Hold on, let's put that on the ES. 39.46, and we're not there yet. All right, so the SPX got there yesterday, or very close to it. This morning on the ES, we're still not there. We still have a ways to go before we get to those lows. Let's recheck that 10. I didn't realize we were on the SPX. So still same thing. We're in the same spot, less than 1% away from the 10. So we have not moved too far too fast. Now, Tesla, on the other hand, is setting up for a little bit of a move today. This morning, it made it down to 184.34. We have a market maker move of 2.6, I call it 2.7. So today what I'm looking for is either a continuation and a breakdown of this level, or a gap down rebound, very similar to this day right here. It opened, gapped down, really faded, and then came back up on the day, on a recovery day. We are setting up for a trend line break over here. And while the breakout day very likely is going to be tomorrow, just like that day right there was the breakout day, we have to first get the recovery day, which would be this day right there. So I don't know it's going to do this. This is the same setup that the S&P had last Thursday when I talked about watch for that reversal off of the lows Thursday morning. And sure enough, that was the start of this rally back up Thursday into Friday, right, and into the new week. So I don't know that it's going to do it, right? But that's what I would be looking for. Open, gapped down, maybe drop a little bit more, and then the rebound, but not yet breaking out above yesterday's levels. And in fact, I don't think we'll even make it through yesterday's open. For a really good setup, we don't want it to actually break over that trend line today. We want tomorrow to be the breakover day, because that's where you get a day that looks like this, which is really great. I love those. That's the whole point of trading the trend line breakover, is to get one of those kind of candles. It's a big mover. So we're set up for it, whether we get it or not. It would actually be tomorrow that we get the big day, hopefully, if it doesn't get all mixed together today. But on the other hand, just keep in mind, it doesn't owe us a move up. So it could break this structure and just keep heading to the downside. $172 and then 157, obviously not in one day. We're talking about a swing to the downside. First tangle point would be around 180. And for the reversal, if it's going to come, I'm thinking at around 183. That looks about right, right? So we're at 186, 185 this morning. We're talking about another $2. That would get us down to around 180.50, or excuse me, 184.30. It's another $1 down. The 111 is what I call the warning center. If we're going to break down and fail to continue the breakdown and actually reverse and go the other way, price is going to get hung up at the 111, fail to get through it, fail to get to the 1236, and it's going to make its move back up again. So a lot of if in that, right? So 180 would be if we don't reverse and we just keep falling. If the breakdown out of the channel is actually a true breakdown, then 180.50 would be the first target. It'd actually be today's target, because we could easily get to that. 180.50, and then 172.59, and then 157.57. For those other numbers, that's not today, right? That's a swing. For today, 180.52. It looks like a trap. So I'm thinking a bullish move with a recovery candle like I showed on that kind of like gravestone doji. And then tomorrow, the big breakover day, that big bar to kind of get back up to like 205, 210 in a single day, right? Just a big, massive, ripping reversal. So it won't be so cool if they tie these two candles together and we get the reversal and the breakout and the follow through all in one day, because that would likely only get us to around, say, 198 or 202, which is fine. I mean, that's okay. But when you can catch one of these big monsters, that's a game changer. So I'd rather catch that. All right, Apple retested that level on this recovery from Thursday into Friday into Monday, right up to the top of the range. Rejection gap down. That gap isn't filled yet. So, still looking for that. Close doesn't count when it comes to a gap fill. So Apple still has this lower gap down here, and it still has this gap right here that needs to be filled. This morning, Apple's up slightly. It closed at 151.60 and it's sitting at 152.03. So it's barely up this morning. But it kind of ties into the idea of this gap close. So if we open at around 152, come down and close that gap, and then make a run for it. And again, it doesn't owe us this, right? And I'm not seeing any setup that says that this is a bullish setup. I'm just looking at, if I was going to trade this morning, what I would be looking for is getting that gap closed and then a run, but not getting outside of that 154. So a little bit of a stabilization day. Remember, it's supposed to be a range day today. At least through the morning session, it's supposed to be a range. So NVIDIA and Meta both have this really big earnings gap that is not resolved yet. It's a really big deal. And the line in the sand for NVIDIA was 230. Everybody kept saying, oh, it needs to break 230. If it does, we're going to go back down and close that gap. Well, it did. It broke 230 and we didn't close the gap, right? Now we have this 224 low. So now that's the level that has to be taken out if we're going to come down and close that gap. So even if we can break through March 3rd low, even if, which is a pretty good size if, we still have a structural level at 231 and then another one at 224. Right? So, and there's no setup here, right? At least on Tesla, I have numerous examples of that reversal that I was talking about. With this, there's no setup. 233.45 this morning. So we're underneath that purple line, that 234 weekly pivot point. We're still underneath that. We're barely gapped up this morning. There's no gap in this vicinity that needs to be closed. So there's no gravity to take us to the downside or anything like that. We're just sitting in the middle of nowhere with no gravity, no pivot, no structure, no nothing. There's still a lot of liquidity up here. We can see that we came into it, but we didn't make it through there. So if we do go back up towards that 239, 240, 241, 242, we get up into there, there's still a whole lot of liquidity up there, and we're very likely not going to get through it. I think it's going to take a lot more work before we're able to get through that. What's much more likely is that we fade down until we find a demand zone. Now, it looks like there was a little bit of demand here around that 232, 231. But where was it yesterday? Now, that's not necessarily a fair statement, right? Because if we came down into that low in the later part of the day and nobody was willing to step up in the later part of the day, hey, I get it. I don't trade the later part of the day either. So maybe the lack of demand was just from what time we came down into that level. But, still, there's no demand to be seen there yet. And this pre-market move up doesn't mean anything, because in the pre-market, volume is so light, even small orders can move the market. Now, take it all out to the weekly, and you can see that structural resistance that we were talking about. Call credit spreads on top of this market, or even somewhere near the top of this market would make sense. That is a heck of a lot of resistance. But I wouldn't try to short this yet, because it hasn't given us a short signal yet. Now, Meta, every time they talk about banning TikTok, this gets just a little bit more juice. And yesterday, banning TikTok was brought up again. And now the White House is thinking about, or maybe they already did, put out a statement on the topic. They're not specifically naming TikTok in this new bill. The new bill just aims to ban companies like TikTok, or aims for the power or the right to ban companies like TikTok, which still gave Meta some juice. So we still have this earnings gap that hasn't been resolved yet. This is what they call an island, and we haven't left the island yet, right? Like Survivor. So we're either going to get that island reversal and gap back down to 150 eventually, or we're going to come out of this and start making the move to the upside. And yeah, Snap also. Meta and Snap, like peanut butter and jelly. Now, Meta's, I was going to say Meta's down, but it was only on the bid. Meta's at 164.47 this morning, so it's barely down pennies. We're getting a little bit of a megaphone pattern here. If we were to use OCR analysis, single candle analysis, rather than the more traditional old school technical analysis, then the outside bar of yesterday and being just slightly down this morning actually gives us a springboard. Just keep in mind that this outside candle holds a lot of weight. So we need to see it resolved today. It's a really big deal. At the moment, it says a lot if you kind of think about, open and close. So we closed there, opened here. So a really nice gap up, came back down and closed the gap. Opened here, came back down, closed the gap, and a little bit more. So it just a lot of pressure in the pre-market and then nothing. Grimes kind of covers that a little bit in his book, where he talks about passing the buck, right? If they have a lot of something and they want you to buy it, they got to convince you to step up, right? They'll have analyst rate changes and they'll talk about it on the news. They'll put it out in media as much as they can and get people to buy it so that they can sell it to them. If on the other hand, they need more of it, they need you to sell it. All right. So you're either providing liquidity or you're taking liquidity. This is pre-market gaps to the upside, meaning everybody's getting all bowled up, excited, and then they sell it to you and down it goes. So I don't think that's done yet. Evening star reversal on Microsoft, and it's sexy. That's just phenomenal. Too bad it's not a weekly. Still, it's a good setup. 1 day short. It's hard to see what kind of follow through we're going to get since this reversal isn't at the top of a range. It's part of this move down, right? So it could be just a pullback before continuation lower, but having that setup way down here instead of having it way up here takes a lot of the juice out of that setup. So yeah, great example, just wrong location. You can still watch for that follow through. Microsoft is down a little bit this morning, but watch for 252, the weekly pivot point, to provide a little bit of structure. And if we keep going to the downside, there's a gap fill at 251. But I wouldn't expect this to like really get squishy and head down hardcore without the whole of the market going with it. So I'd be looking for that reversal, probably off of the 252 pivot, maybe that 251. And that's if we actually get that breakdown. A little bit of demand on the weekly. All right, nat gas, again, getting punched in the face. It's still in that basing pattern. Like we've talked about, nobody expects a V-shape recovery off of those lows. It's probably going to take a long time, and everybody's watching. And the more everybody watches, the more it's not going to recover. So, that is the theory, right? That that tech companies are addicted to borrowing and that higher borrow rates would hurt tech more. I'm 100% behind you in that way of thinking. But if you look at the FANG names yesterday, they did way better than tech. So then you have to ask, and this isn't necessarily tech, right? I always cheat and I refer to this as tech, but to be fair and honest, that's not tech. XLK is tech. And still it looked better than finance yesterday. So when you look at XLK technology sector, the greatest names inside of tech are what, right? That's a basket of stocks. So we can just open up the basket and look at what's in there. Apple, Microsoft, Visa, Nvidia, MasterCard, PayPal, Intel, Adobe. And, XLK, to be fair, did go down, just not as bad as everything else. And instinctively, I went to the daily, but I think intraday would probably help us out a little bit more. So there was Powell opening his mouth, right? That little mic drop moment. All of the markets have that. MasterCard looks a lot like finance. PayPal looks a lot like finance. Intel actually held up pretty good until the later part of the day. Same with Apple. Intel and Apple look very, very similar. Add Microsoft to that similarity. Visa, it looks more like PayPal. So I wouldn't necessarily lump Visa in there, but still, it held up a lot better than finance did on its own. Nvidia threw everything off like a duck in water. It would just shrug the entire thing off like it was nothing. Beautiful rebound. And Adobe barely took a scratch on that compared to the rest of the market. So when you're trying to, use that logic, that broad brushstroke, and say, shouldn't that have hurt tech more? Well, this is what makes up that tech sector. And where's the pain? Well, Apple runs its books really good, right? I mean, there's been the joke of like the Bank of Apple. So when it comes to, money management and dealing with corporate finance, Apple's an example. Microsoft, another really great company. These are the darlings of Wall Street, well-run companies. They manage their finances really well. And they are the greatest bulk of the XLK ETF. So when we open up that basket of stocks and we look at who makes up the biggest part of that basket, those two do. Not hard to see why we didn't sell off if the two biggest monsters in that basket aren't addicted to borrowing and going to take the beating that some of these smaller companies would take. I'm still right behind you though in that same logic, right? That instinctively I would believe that tech names would suffer from higher rate than banks, right? Because banks should appreciate being able to get a higher interest on money that they loan out. One thing I didn't like yesterday is that the green line never took control in that move to the downside yesterday. It did not lead at all. Now the reversal at 3 o'clock, it led in that, but it wasn't hard to see why it was the leader because it was already on top of the pack. So once everything flipped over, of course it was the leader. It started in front. But that move to the downside yesterday never had green line leadership. We had a really nice weighted AD. It got below minus 500 really fast, and it held it just beautifully all day long. Great follow through. The ticks stayed mostly in the red, and that reversal off of the around, what was it, like 1 o'clock, 12 o'clock, where the market spiked up and then giggled and fell back down again. Showed up beautifully on the ticks right there. That press up into VWAP with the ticks getting hung up at 750, and then down she went again. Beautiful. textbook play. All right, the K-Web names are down again this morning. That would be your JD, Baba, Baidu, Billy, PDD. I'm not seeing emerging markets. We're a lot farther down than it should be. And then a whole lot of flat stuff, just zero, worthless. And bonds up a little bit this morning. Bonds and, well, gold's not up enough to even mention yet, but let's go look at semiconductors and bonds. Pot stocks are up this morning. Bonds are up. Staples are up. So maybe we're finally getting a little bit of that capital rotation. Chip names. No, chip names aren't up enough to even bring to the table yet. And the pot stocks that are up are kind of sketchy, little penny stock plays. VFF, OGI. I don't want anything to do with those. ACB's up this morning, which is another one of those penny stocks, but has a ton of liquidity. SNDL is another one that has fun options to play for like some gamma scalping. That one usually triggers on the list for gamma scalps. It's a little early still in the week for gamma scalping, but yeah, maybe because everything's lit up, maybe we can see a little bit of that today. If we're going to get a capital rotation, we're going to anticipate a little more out of healthcare, utilities, staples. So far, not yet. So the takeaway today is anticipate a market pause as the market waits for Powell. Make sure he doesn't do another mic drop moment, and that he's not going to say anything surprising or shocking. But with a little asterisk that says we're getting job numbers, and if everybody kind of has the same feeling that I do, that he fired his shot yesterday and he has nothing left to shoot today, they might blow him off completely, ignore him 100%, and focus right up on those job numbers. So, something to consider. Plus 10:30, the EIA report, and 1 o'clock, the 10-year auction. Really big, important things that I believe trump Powell in the House today, because I really don't think he has anything left to say that's going to rattle the market. I could be wrong. I mean, hey, I was wrong yesterday. I thought it was going to be same old Operation Don't Rock the Boat, and he sank the boat. So everybody, be careful, be safe. watch the clock. I'll see you all tomorrow.